What is up, everybody? Today we're talking about why are car payments so high? And it is a very volatile subject right now, but we're going to do our best to talk about it a little bit, give you some reasons of why this is happening and what's going on, talk about the difference in what was going on last year and this year. And at the end of the video, I'll leave a couple of tips for you to what you can do to offset this for your own family and make sure you're having a good holidays as we go into the fall. So first of all, thank you for being with me today. If you haven't subscribed to the channel, please do so. Share it with your friends. We like to bring this automotive auto broker industry knowledge as best we can to the masses. So first things first, guys, listen, these payments are definitely higher than they were a year ago. Last year, if you had a $35,000 car with zero down, the interest rates were about 4.5%, which means that your car payment was about $720 a month. Now, a year later, the average interest rate is about 7.2%. For the same amount of time, same amount of money. That means the car payments are about $50 higher a month. So $769 when I look at my screen. But, you know, that might not seem like a lot, but when you're looking at a $35 car payment, $35,000 car payment, and you have zero down, 5 years, it's a big deal. You can definitely finance the car longer to make the payment a little bit lower, but it's just basically adding on more interest, which is the bigger issue. So a year ago, if you made all 60 payments and had a 4.5 interest rate, you'd spend about $4,500 in interest over the life of that loan. Now, today, you spend about $7,500 over the life of the loan. So not only is the payment higher by $50 a month, but the amount of interest you're paying, the total amount that you're paying for that car, is about $3,000 more in interest payments alone. So what that means, in fact, is that your buying power has been decreased. Like the things that you're trying to buy that you could easily purchase a year ago have just become a little bit more difficult to obtain and continue to have the same lifestyle that we've all come to enjoy. So, leasing has been affected by this. Everything that you do in the automotive industry when it comes to the interest rates has been affected by this. Now, there's another thing going on. Not only are the interest rates high, but the availability of new cars is still decreased from where it was in 2019, 2020. So that means that a lot of the new cars that are coming in from the manufacturer to the dealership are pre-sold. So if you wreck your car or you're in an accident or something happens to your car and you need a new car this weekend, it could be very, very difficult to do. And so those prices have not come down. The interest rates have gone up. There's a lot of things that are pushing these payments just about out of reach for a lot of people. So what can you do about it? What can you do to make sure that you're not going to be just a victim of this when it's time for you to get a car next? So first thing, maintain your car. Find yourself a good local mechanic that you can work with that will take care of your car, let you know what preventative maintenance you need to do to take care of your vehicle. That's like the biggest thing you can do to extend the lifetime of your car. If you do maintenance that needs to be done before it breaks, you can extend the life of your car. Now, the second thing you can do while you're doing that is start putting money away. Let's say you haven't had a car payment in a while, and I'm talking about like 3 years. Well, the average new car payment is $729, and you might like, I can never make that payment. I say, okay, well, how close can you come to it? And then start putting that money away every month in a accessible savings account or money market with a financial planner. So you're like putting that money away. It's not going to sleep in a CD or anything like that, or long-term investment or life insurance, but it's just going to go into an account that you can access if you need it. Now, what we're going to do is try to exercise that muscle. We're going to try to basically put that money in that account every month on the 1st or the 15th and leave it there as long as we can and compile that money and compound it. So you can be saving for a down payment. You can also get used to making a higher payment. So if you can put $700 a month away or train yourself to do that, if something happens, you can always access it. But hopefully you might not even need it. But when you do, you'll be used to it. You'll be ready to make a payment that's higher than what you were used to making 5 years ago because those payments don't exist anymore. And my last tip for those of you who stayed with me this long is refinance your car. Write this down. You're going to need to talk to a credit union. I've got lots of people that are doing this in my town. I'll leave the phone number to a credit union that you can contact if you're in Colorado that will do this right now. You can refinance your car. It's not like refinancing a house, so you don't have lots and lots of origination fees and points or whatever you want to call it, interest added to the loan. You can just go in, and as long as the value of the car lines up with the credit union's standards and your credit supports it, you can refinance the car and they will lower your rate to get that business. So you may have your loan at another bank or financial institution. This credit union wants your business, so they will buy that loan, give you a lower rate, which will effectively lower your monthly payment. Now, some of these institutions are allowing you to not make payments right away. You can go out to 90 days before your first payment's made. So think about it, guys. It's October, November, December, January. You won't have a payment till January. So if you can refinance your car right now, lower the rate. I'm not recommending that you extend that payment out, but if you need to, it's an option that you can look at right now. So to sum it up, we've got a new normal right now. It's been going on for about a year. Interest rates are high, payments are high. Those are three things that I gave you that you can do about it. If you found this video informational and useful, share it with a friend. Don't forget to subscribe to the channel. I'm Ronnie Haskins.